Hello everyone and welcome back for my more important analysis videos on Friday 11th of January with me and Richard Perry, market analyst at Hantec Markets. Let's look at dollar yen, which has been tracking lower. It has held on to that downtrend of the past now 4 weeks. A little bit of a rally yesterday, but not necessarily anything that really changes the dynamic. Momentum indicators still struggling really. Look at that RSI really sort of struggling just a shade above 30. MACD lines stabilising to an extent, but I think more to the fact that stochastics are beginning to sort of roll over again. Doesn't look great. And I said sort of previously that this downtrend that we've had over the past 4 weeks now, I mean, it could break through simple consolidation really. Doesn't necessarily mean you're going to get a decisive rally, and the fact that the market sort of fell over at 109.10 on Tuesday, I think adds to the fact that we're sort of in the process of forming a lower high. Whether we've seen the lower high at 109.10, I'm not 100% convinced yet, but the fact is that we're sort of trading underneath all this overhead supply from 109.75, and I think that there is the process of forming another lower high. It's just that whether we break that downtrend in the near term or not. Not entirely sure whether the market is going to be sort of decisively turning lower from here, or whether there's going to be an uptick back on the RSI towards 40 again, and that would be your selling opportunity area. So yeah, I think it's a little bit up in the air at the moment, and you do have that downtrend which is holding, and I suppose the trend is your friend until it ends, so watch out for that, but downside pressure I suppose continues, and that would imply a retest of 107.75, which was yesterday's low, but the hourly chart is fairly stable really on momentum. Fairly stable. If I sort of zoom in until you get rid of that spike low, then you can see it a bit better. But yeah, you've got these momentum indicators and moving averages, which are all sort of fairly much neutrally configured now. But as I said, underneath 109.10, you're still corrective and still negative. And then if you broke below 107.75, then you would really resume the downside move once more, because certainly given the fact that that would negate a positive candle, that would be bearish. But today we're sort of looking out for US CPI, and that could have an impact certainly on this chart, but I'm still sort of expecting a lower high to be confirmed at some stage, sort of between 108 and, well, which would potentially be that 109.10 mark, but underneath sort of 109.75, 101.10 figure area. So wish you good luck in your trading today, and I'll speak to you again later.